This is Talking Capital Markets, where ideas drive the markets. We move past the headlines and into the heart of the deal, breaking down IPOs, M&A, governance, and the strategies driving real growth in today's capital landscape. No noise, no hype, just conviction, execution, capital in motion. If you're building companies, raising capital, advising boards, or deploying investment, you're not just listening, you're in the room. And now, here are your hosts, Mike Blankenship and Brian Jue.
Welcome to Talking Capital Markets with Mike and Brian. I am Brian Jue, and my co-host, Mike Blankenship. Mike, it was great to see you in Los Angeles recently.
Yeah, it was great to see you. NBA All-Star Weekend, and met with some great folks, and specifically in the capital markets area, and ones that making the world a better place from you know fun and sports world, but also other kind of philanthropic things. So it was great to see you there in Los Angeles.
Absolutely, and I gotta tell you, it's like in just a short period of time, the kind of people that we met, just what you and I were able to talk about, and actually we have a segment that we did as well. But you talk about connections, content, and just everything that happened. It happened quick, it happened fast, and it was real and really good. I know that a big part of this is because we're embracing human connection and getting to know people, getting to see the face to face, eye to eye, and that's how deals get done.
Yeah, I completely agree. I call it activating the connections. You're making sure the network and really getting to that actual capital formation. So, especially on the business side, when you do have these meetings, is they have to be purposeful, and making sure you have the right mindset going in. We meet myself, we meet a lot of founders that are early on in their business, and maybe we can advise them as looking at this is where the capital markets are. And then you meet others that are, later stage and past that Series B, Series C, and ready to go into the public markets, because they see that the public markets democratizing their company is a lot better than trying to do an M&A deal where, not you're negotiating, valuation, sale, price, and you may not get everything. Whereas if you're in the public markets, you'll continue to be sort of on an ability to see the market value, but you can maintain sort of control and ownership. So I think it's good to get those connections early and be purposeful about being in front of people. So that's how I see it, and that's how I think I've always operated. I am a lawyer, Brian, but I look at it from a business perspective, connecting, and because I do want things to be accretive. I do have that growth mindset about it, and I think if others have that, we would have a positive, you know, outlook on it. And obviously, there's going to be bad actors out there. The greed factor does exist, but for the most part, if you are a company really trying to achieve something, whether it be in the technology space or the life science space or energy or consumers, you take a look at where you are now and where you want to be, and then scope that out down the road, and then meet the right people. And I think the meetings that we put together where I see you, and those are ones where we can have those activating connections all the time. And I really do think it'll help, the capital markets general public. I know there's two major stock exchanges where people do trade, and you go back to the history of trading. It was people on a floor, or even before that was people around a tree trading and talking about how they value and do business. And so again, going back to connections, making sure you have that human touch.
I agree with you, not 100%, 1,000%. I know it doesn't exist, but absolutely. And let's talk about that for a minute. And this is why we're doing the podcast, Talking Capital Markets, is we're trying to talk about it from a straightforward point of view. But you brought up a great point, Mike, about that you're not just a transactional attorney, because certainly those exist. And I deal with a lot of them too. So, hey, no offense to anybody else, but This is why you and I have such a great relationship too, is because you're thinking about the business and you're thinking about it as a business, and a lot of the noise, let's just call it noise out there. There's just all this noise all over the place about what companies should do, shouldn't do, and often it's just coming from the perspective of somebody trying to close the transaction for themselves, right? And we're trying to get through that, cut through the noise and help. And there is all these gaps. And one of the things that you mentioned, Mike, about why going public can make sense for a lot of companies, that instead of going down M&A route, is because you get a better valuation. It's the same reason why VCs want to take companies public, why PE firms want to take companies public after they buy them on the cheap. It's they want that private to public arbitrage, that difference in valuation. And with what's going on with the SEC right now and our markets and everything else, there's certainly an opportunity for more companies to get some of that arbitrage for themselves. That means the founders, that means their shareholders, and everybody else.
Yeah, I think that's right. You're extracting the best value from the transaction, not for yourself or not for others. It's seeing the value add on a deal that one company goes public, it really is out there. That's, as they say, it's the start of the journey, and to being it, it's certainly not the end. And once you are out there as a public company, there's a whole lot more ongoing compliance that I'm sure we'll talk about in the coming months. But as a company, if you're a CFO or if you're a CEO, and you really have strived to be in that goal, look at the advisors, look at the people around you, and see how the value to get you, what value add there is from each party to get you to that particular area. And it's not just ones that are just out there and you know pushing you one way. It's ones that give you real solid, honest advice that you can go that route. And oftentimes you see some that are maybe too early, but there are steps that they can take to probably improve that. And that's part of connecting them with the right people. So continuing to look at that is important. Again, we've talked about before, have your financials in order, house in order. I recommend that for any company early on. It's great to have a Excel spreadsheet, but I think it's better to have organization and make sure you get it done.
Let's talk about that for a minute. And because we know our audience is a blend, right? We have companies that are early, we have companies that have existed for quite some time. I want to talk about that for a little bit in a minute. Founders create a company with knowing that they have an exit in mind, right? And sometimes what we've seen is you look at their financials, and their financials are just, all pro forma base, doesn't make a lot of sense. And in some cases, they might have enough going on and have a hype vehicle or something like that where they might actually be able to get public. But once they are public, now there's a pressure of actually producing. You can't just be publicly traded and living off of pro formas and hoping that's where you're going to be. You got to have revenue at some point in time, right? And some of them all aren't always prepared to make that happen quickly. And then on the flip side, we have the company that's been in business for 10, 20, 30 years, that didn't think about an exit this way before, because the old school thought is your old line of thought was, if it's a great business, you'd never sell it, right? And they're trying to hide money from taxes and bury, or legally, as well as sometimes not, but company cars for their personal cars, might have a jet that they're using for personal reasons, all these types of things, which I know you've seen because we've seen them as well. But now, when it comes time for them to potentially see and understand that there could be a better exit for them as a publicly traded company, now they've got a lot of work to do to go backwards and fix their financials to show that, you know, their adjusted EBITDA, their cash flow is strong, it's solid, there's real money that business is making. And so I think for both, what we're talking about, what Mike and I have been talking about throughout these, our different episodes, and including today, is when you're preparing, you really have to be preparing like you're going to be a public company. Even if you're not, even if that doesn't become the plan, even if you just end up being acquired by a strategic buyer or PE or whatever it might be, if you are planning and treating your financials like you're going to be a public company, you really can't lose.
Yeah, look, preparation is key to a lot of what we do in life, but it is certainly when it comes to business and trying to be a public company. Because when you are public, the public owns a piece of you, and they want to know everything they possibly can. That's material that would make a decision critical for them. And I think preparation, the earlier you're prepared, the easier it will be on your team, on your CFO, on your financial advisors. To be able to market, to be able to go forward, to get an understanding of valuation. Getting all that early on is very critical. I talk about it all the time with my colleagues that, you always want to be prepared. One thing for us is always understand the deal, is number one. But number two is making sure you're prepared. And I think that is, without a doubt, a very important lesson there, Brian. I can't stress enough. Talk about the two hats, running the business, the other one going down that public path. And whatever way you go down the public path, you still will have to have financials. And you know what? Even if you go on down an M&A path, you dual track it, you'll still have to have financials because no one's going to buy you without understanding your business vis-a-vis your financials. They can understand the legal, they can understand the contracts, they can understand all that, but they don't understand what the actual monetary value of that is unless they have the financial statements. And that's why we have them built today. That's why we have certain rules around them because we want to make sure there are good actors out there that have really good, solid financials, and you want to make sure they're there. You mentioned pro formas. Yes, a lot of companies will have kind of future forward looking projections. Obviously, if you do an IPO, you can't have those in there, or at least if you were brave enough to do it, you wouldn't take a lot of risk on that because under the securities laws, it's a strict liability standard. So you can't be out there putting stuff out that you don't hit that you can get sued. There's a very active plaintiffs bar out there that keeps a lot of disclosure in check. So you want to make sure you understand that as well. But look, go back to it. Preparation is critical. You go through school. I'll analogize it to being a lawyer here. If you prepare to be a lawyer early on in college before you go to law school, you will do really well going through law school because at least you can prepare yourself for that. If you go on to school on a whim and you're not prepared, you may not have that good result becoming a lawyer there. So I think it's the same in the business. So you have to be prepared early on, have the goal set, and then go down the road and have those financials done. So
And this is, folks, building a great company, it's hard, right? And as Mike said, if going public, or even if it isn't going public, but if it's trying to grow your business and raising capital, and whether that capital, you're trying to access capital as selling shares to accredited investors or raising money from angels leading to VCs, whatever it is, or even if you're just looking for bank financing, which is hard to get, right? But whatever you're doing, your financials have to be in order. And that's what we're telling you, and the importance of it. And whichever route you go, if you're thinking about building your business and you do it the right way, you really can't lose. And it is hard when you have to wear two hats, but if that's the challenge you took, being an entrepreneur, being a founder, and it's what you got to do. You do have to wear two hats.
yeah,
Well, thank you everybody for joining us again, talking capital markets with Mike and Brian. Mike, always great to see you, talk to you.
same here,
We'll
Brian.
see you
It's
guys
been
all
a
next time.
pleasure.